I think this is really going to blow your mind on Aduro. So this is kind of a continuation to this video that I made the other day, why R3 is hugely important for Aduro Clean Technologies. And I want to expand on that and expand on this comment from Mina.
Now, having said that, that is our primary focus to work on licensing. But in the future, we are interested in having our own projects, right? This is a very significant gross margin. Fastest way to scale, the fastest way to deliver value is to work through licensing, right? But at some point, we're going to be making more and more revenue. We're going to have cash on hand to have our own projects as well.
Okay, so going back to the investor presentation on page number 17, he talked about in the video the fastest way to build value is through licensing. And in this video that you need to watch, I talked about how they are building R3, and this is R3. Small semi-commercial unit. And that in the video, I talked about how that unit alone, because it's about this size here. It can be started smaller, but then they have it's like edging modules. They can get it to that size, no problem, right? It's a matter of putting a little bit more money in. But that R3 would be their own unit. So think about it is like when you are doing a franchise model, you want to have your own restaurant, like in, let's say, McDonald's, right? You want to have your own restaurant to show the model before you franchise it to others, right? So they want to have their own unit, R3, to show how it works, and then they can franchise it to others. But in this piece, he said, we want to have our own units, right? So the first piece is going to be their own units. He said, at some point, we're going to generate enough money to have our own units, and we're interested in that. So let me walk you through how massive this opportunity of having your own units is. And Ofer said it in the interview with Penny, is that we're going two routes. The licensing part, but we also want to be independent and not be hostage to others if we want to, right? So imagine a situation like this, where down the road, like they're showing here, they are able to generate through licensing 95 million of revenues and 80 million of bottom line, right? Now that's significant money, right? And now what could they do with this money? Let's say what Mina said, we have so much money, we can create our own units. So let's just say, let's just round it up to 100 million for simplicity, right? So now we go back to this and we look at a unit like this. That and capex here is about 200 million. But I said in the previous video that this model is for building the unit for somebody else. So it's not going to cost Aduro 200 million to build this unit, because if they're building it for somebody else, they're being a developer for somebody else, they have to make money on it, right? So it wouldn't be crazy to think that it would only cost Aduro half of that much, because they would need to make half of the profit on it, right? So if you can play with whatever numbers you want, but I want it simple. So if, let's say, instead of 200 million for a unit like this, they can get it done themselves for 100 million, right? So they can build a unit 225 tons per day, 76 1,500 tons annually. A unit like this would generate 70 million of revenue and gross margin, that's really EBITDA, of about $50 million. So you have a situation where you put in about maybe $100 million, and you get EBITDA of 50 million. And this EBITDA, as I said in the previous video, is low because it assumes that you are getting the plastic feedstock for free. The world is spending massive amounts of money to ship plastic to other countries. Some countries are paying 1,000 euros per ton of penalty. So Aduro can get plastic feedstock, they can get paid to take it. This assumes they just take it off their hand for free. But for our case, let's be simple and just use this number, 50 million. What is a unit, because that's a business now. What is a business worth that generates 50 million of EBITDA? Minimum, if you have a growth company, it's a minimum 20 times. So 50 million times 20, that thing is worth $1 billion. You put in 100 million that came from your own cash flow, and you just got a unit that increased your value by $1 billion. Do you see how this is literally like a money printing machine? And this is not a business where you have to look for clients, no. You just build that thing. You can get plastic from everywhere. Almost 400 million, 350 million tons of plastic is getting produced every year. 350 million tons of plastic is getting produced every year. You can easily get that. This machine wouldn't even take 100,000 of that 350 million. So you can get that plastic, run it through the machine that you built with the cash flow that you had, and then whatever comes out on the other hand, which is the petrochemical product, well, you can easily sell that. That's like selling gold, right? It's a global market for that. It's not like you have to go and convince somebody to buy it. You can just sell it. So the selling part is no problem. Getting the feedstock, you're getting it for free, or you're getting paid to take it. Your machine is the only machine in the world that can do this. You can deal with plastic that nobody else can. So it's not like you have all this competition. I mean, 6% of plastic is recycled. So it's not like you're competing with somebody. Like they're begging you to take it, right? So it's a different business model. But now, that's just one unit that you can build for $1 billion valuation. Now, what makes you think they would stop at one unit? Why couldn't they build 10 units like this? And in total, 10 units would bring in a value of $10 billion. $10 billion for 10 units. And how much of plastic would you be recycling? Well, if this number for one unit is about 100,000 tons, which is not annually, so 10 units would be like 1 million. 350 million is produced every year. And you think Aduro can't handle or can't take a market of 1 million? That's 0.2%. What if they took 350 and took 1% of that? That's 3.5 million tons, right? So why can't they have 30 units like this, right? And now we're talking about not $10 billion worth of value, but 30, 40, $50 billion worth of value. That's the path. That's the vision. Just having your own units, right? And now, but now, that's starting with like, having 100 million of licensing revenue, 2027. Let me give you a different scenario that might happen. The market wakes up and finds out about Aduro. Maybe it graduates from the ghetto exchange and goes on a real exchange. And then let's say the stock goes to $5, right? In like a year and a half. Because more people find out about it, they wake up, right? There's more exposure. It gets on a proper exchange, right? So now you have a valuation of 500 million. Why can't Aduro raise 100 million, right? 20% dilution to raise 100 million and build a unit like this that generates $1 billion worth of value. Now you're a $2 billion company, right? So a unit like this now is generating you 50 million of EBITDA. You have a 2 billion valuation. How about raise now 200 million, 10% dilution, and build 2 units like this, right? And you can keep doing it, and there will be money for it. Because if you can demonstrate, let's say through first R3, that you can print money, meaning you can build a unit, and then you build a unit for, just like I said here, if you build it for 100 million, or maybe a little bit more, but you create $1 billion worth of value 10 times, you think it's going to be hard to finance these things? When you show the math, right? You first show it with R3, right? Maybe you get a couple collaborators that keep telling us that this year we're going to get a couple collaborators. So you build R3, you get several collaborators, right? People open up their mind and start punching numbers into their calculator. You graduate from a ghetto exchange, and then you have a 500 million valuation. Now you can use your stock to raise 100 million to get you a big, serious unit, not just semi-commercial R3, right? You can get a serious freaking unit, and then you keep doing it for 5 to 10 years, and that's how you can build a $40 billion company. And we're sitting at a 100 million valuation, right? So the massive upside from 100 million to $1 billion, it's 10x, to 40 billion, it's 400x, right? But that's the vision. And do you think that you can stop on 30 machines, which get you to processing 3 million tons per year? Do you think you can stop there? We're producing 350 million plastic per year, and that doesn't include all the plastic that's in the landfills. Like, do you think they would stop at 3 million tons per year? Why can't they take it to 10 million tons per year, 30 million tons per year? Nobody else is competing. 6% of plastic is recycled. That's it. So the field is wide open, right? But also, do you also understand now why I'm saying is that I don't think Aduro is going to stay independent. Somebody is going to run these numbers when they prove it, when they show a few collaborators, the licensing is there. They can show the math of how their own individual units creates 10x of value based on the build out. Do you think somebody is going to let them stay independent and be like, oh, we're going to build a $40 billion company? I don't think so. I think somebody's going to come in and be like, I want that business. I want that gold mine, and I'm going to acquire them. And what would the acquisition price be? Well, you can do the math. Would you pay $1 billion for a company like this? Would you pay $4 billion for a company like this that has those kinds of economics and just massive upside? So again, that's why here they are interested down the road to have also their own units in addition to having the licensing model. And just remember, that's one vertical. That's one vertical. Plastic. We're not talking bitumen. We're not talking renewable oils. And we're not talking tires that they just came up with. Just one vertical. Thanks for watching.